Let's turn our attention to the equities market for this week. But first, let's begin with the analysis of last week. The NGX All-Share Index and market capitalization appreciated by 1.06% to close the week at 55,529.21 and 30.25 trillion naira respectively. And if you look at the total turnover, which of course has been put at 1.91 billion units of shares and was worth 18.4 billion as at last week. So all the total numbers of shares exchanged was around 2,311 deals as at last week. Well, when you look at, of course, the in contrast to a total of 799.848 million, which of course was traded in the previous week, compared to last week was more of a bit of market than the other one. Now, the ICT industry, looking at that, the activities by volume, activities was around 601.39 million unit of shares, which was valued at 2.6 billion and was traded about in 1,607. But the question is, what was behind the index movement last week? That's a big question, and what is to come for this week? I'm Bruce Omodian, Chief Research Officer, Investor Consulting Limited. As usual, joins us on the program. Thank you for joining us.
Thanks for having me, Frank.
I know we talk about the fact that the election didn't have effect on the movement of the market last week, of course, on the analyst hangout on Friday. But again, some people will say, how did the market pull that magic to the fact that it was supposed to be a mixed market, and the fear of election was supposed to have impact on the market, but that didn't have much or significant impact on the market. So what would you say was the major driver, just a major driver for the market last week?
Yeah, one of there are part 3. Let me start there, but let me mention one. First is that we should make it clear. Now, even as the data was released last for the month of January, we saw that the foreign participation in our market has dropped significantly, saying that the market is being controlled by the local investors. And that is as post-COVID-19 era, when the market dropped as low as 11 years low. That was in March. Since then, market has been on uptrend, supported by what? Impressive corporate earnings. And I tell you that even investments again, as the company on the exchange are posting better number, is supporting also their payout. That is the attraction. That is the second one. Another one is that, if you look at the election season, because at this time the foreign investors are not selling down, the local players understand the terrain where we are, that after election life continue. They were not selling down. But if you're to be foreign investor, I tell you, once they come to election year, not only Nigeria, go and check the history of other economy. Once in the election year, you see foreign investors exiting because of what they want to see the outcome, especially where they are done, elections being done, let's say 4 years to know for a new cycle of government and other stuff. But for a country that where there's no government come and see, like some African country and other matured economy where they have like 20 years, 15 years government, fine. But for those where there is rotation government, like in terms of democracy, it comes for that during that period. You see the foreign investors selling that, even some local investors selling that because of what? Either fear. But because the local investors are taking charge of our market, for that, they are not selling. They know that this is, and also, if you look at the 3 candidates, the major candidates that came on board, these are pro-market candidates in terms of their ideology, in terms of
manifestos that they've shared.
That also keep investors, that, okay, no matter how come, whoever that match will also bring reform that put the economy. That also support the market. And also, again, the election and the earning season also coincide again. That we're having earning season and also there's election. And investors know that, election will come and go. Let me take advantage of buying low to participate in this earnings that's ahead. They not stay put in the market. They're not running out. And the good thing is that even last week they were saying that we saw a mixed market, but markets also extend the bullish run. Despite it was a mixed market of 2 days down and 3 days up. Markets also close positive, almost testing about 65,000 mark. For me, it says that market is still bullish, and also we're expecting more results to come. What really pushed the market up last week was just the early filers that want to maintain. But now that we're seeing most of the companies that have released their unaudited in January, notifying the market of their board meeting and also to approve the audited account. That also put the market in that direction that any moment from now, this means they start rolling in 31st of March. That means we expect to see this mixed market next week. Also, is election around the corner for the state government. For that, we expect that this once immediately the election season come and go, all eyes will be what on May 29. So as the new government come in, we know that before then they would have sorted out all the litigation here and there before that day. Once that, and we expect that as we speak now, the new the president-elect should also be running by putting teams around them and good hands and all the stuff. Once it comes on board, start seeing reform. That will also be a plus because when we are doing reform, some sectors, industry will be benefiting from that reform. Also, going to hit some sectors of that. Investors look at this manifesto. Nowhere we're trying to see that where technology is on, where we see there's some potential. That is how to invest. I think for me, the market is still very, very good. But another thing is that we saw some little uptick last week, about last week again from the fixed income market, and we're also having to see another Treasury bill option by Wednesday this week again. For me, investors will look at it and say, okay, let's wait and see. But for those that for income investor, for dividend investor, whether there's a option this week, you don't need to panic.
That's where I'm going. Looking at this week now, election is this Saturday, just 5 days away or 6 days away. So do you think that the same momentum we saw pre-presidential election, do we expect that to continue into the week? So what do you think is likely to change
as at Friday,
from the results?
The market was still having a strong momentum. But it's a new week. I expect to see a mixed market. Why I say so is that as results are coming, the one that don't meet market expectation, people will be selling down to move from that one. While also profit taking is part and parcel of the market anywhere in the world. People have entered earlier. As the result come, it meet their target. They have to sell. For that, we expect to see oscillation, not because the election is coming on Saturday. The major election that every investor want to look at is the presidential election. Why state is always because business operating state, want to have also stability in those states. For that, they are also important. But I'll tell you, everyone want to look at presidential because that is where the real policy that will come. Then other ones will have to block to it. And for me, there's no cause for alarm. And that's what I'll tell you later. Between now and 31st, we're going to see more dividend-paying companies raising their results. For those that had December as year-end, for that, this moment will remain in the market. But for traders, like I said last week, traders should be very cautious in this kind of market now because it's really pure for investors because of dividend-paying. But for me, I said earlier that as a good trader or investor, I have to portfolio. Your trading portfolio and your investing portfolio. Take advantage of all the dividends that we are seeing. Not just in the difference. Take advantage of all these because if you have made money in your trading, buy for dividend stock, take dividend and come back and trade. Because if you say, oh, what am I trader? Let me know all these goodies you are seeing, all these companies they are good dividend. You'll be just be looking, you'll be shaking your mouth. But when you play this one place or you balance your trading, you can become a good market player.
Let's wrap it up with this question. You talked about the fact that there will be treasury bills issuance this Wednesday. Okay. So how is that likely to impact the position of the market or the posture of the market?
Yeah, despite the previous option where we saw an uptick in yields to almost like 9.9, so that last week we see treasury bill yield also dropping as low as 5 points within the secondary market and stuff. But all eyes are now on the coming because liquidity is in the system, and when there's liquidity, there are bound to be prices going. That is too much chasing to price about to go. But let's see what happens at the end of the board. That same trend I told earlier is what I'm saying that between now and end of the week, because of this treasury bill option, the election around the corner, any incident in the market will react to all this information, processing them. And don't forget that by the upper week, all eyes will be on macroeconomic data. We have seen already the one that came from Purchasing Manager Index that already in contraction.
The Stanbic IBTC.
Yes, already in contraction. Then by next week, we're looking at to see the real inflation figure for the month of February. And I said that we're going to likely to see a decline because people have no money to buy. I tell you, when there's no more, what is pushing the price? Most of goods price during that period drop because there was no cash to buy. And people that want to sell want to push out these goods, those perishable goods to go out. Then people bought. And for that, we expect to see a little slowdown in it. But that doesn't say that inflation is not around. It's still there. Don't forget that once also by June, according to now the president-elect have said it that by June we'll be removing the subsidy. Then we expect that there will be also an uptick in inflation as a result of cost of transportation and other stuff. But it's a matter of time. After opening, with time goes and start coming down gradually. But I believe that that reset I told you earlier, before now, that it's coming gradually to the economy, to the political scene, and also to the financial market. Once we're able to get it, I believe that 2024, 2023, and 2024 will be a good year for investors.
Okay, I think we'll have to leave it there. Thank you so much. Always a delight to have you on the program, Charles. Beg your pardon. I'm Bruce Omodio, Chief Research Officer, Investor Consulting Limited. All right. Still to come after the break, we'll be looking at the Apex Bank, of course, that is yet to issue a directive to the commercial bank. Well, according to many, that's likely to happen today. We're back in a moment. Please stay with us.